Hello, everybody, and welcome to the March 5th edition of the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I am here with my partner, Barrie Hederachi. How are you, Barrie?
I'm doing pretty well. Doing pretty well.
Yeah, you sound mellow today. You still resting up, trying to
I'm
charge the
resting up.
batteries?
Yes. I mean, just the type of kind of focus it took last week is I just can't believe I can still do it.
I know it really, they think there's physical tired and then there's mental tired, and boy, that mental tired you really feel in markets like this because the trading is intense, the movements are intense, and you really have to focus to
and
catch
the
the moves.
uncertainty is dialed up a couple of notches.
Yeah, yeah, and we were talking about how one of the things that you and I've been trying to do is make sure we don't get emotionally invested in the headlines and the news and the storylines because it just screws up your trading. So
right, we did pretty well on that side.
Absolutely. So one of the emotional favorites of the crowd is Bitcoin, and we always start to show off with it because I look at it as a really good proxy for risk. And Barrie and I were talking before the show. This is not a positive development for risk, the Bitcoin chart. For the last few weeks, we've been hopeful that this move up above the full square and settling above it would give us a platform to kind of move higher. We had the 60, 68, 69 day cycle that was running that ended, and we said, okay, maybe we're going to get a nice move up. The last few weeks have not been good for Bitcoin. We lost the square, gained it again, lost it again. This time we couldn't even sit, not one bar could sit fully above it, which is a sign of weakness. And I drew in sort of the triangle we're looking at, which equates to like some sort of fourth wave here, meaning we've got one more push down and a fifth wave, whether it's a false breakdown here or a continuation down, which is going to get us down to the full square around 24,000 or sub 20,000. So my view at this as a proxy for risk is not very positive for risk. And, we're probably going to wind up for a couple more weeks before we make the move down. But it looks pretty rough for Bitcoin going forward. What do you see looking at the chart, Barrie?
I pretty much see the same thing, but it might be faster than a couple of weeks.
It might
at this rate.
Yeah.
Well, I mean, we've been talking about how much overhead it has, above those two highs, so that was definitely in play, and the fact that it couldn't hold above the square, that was a giveaway. And now, although we're chopping back and forth across it, so there's something happening.
Mm-hmm.
But it's not strong. Something's happening towards weakness. So,
agreed. Mm-hmm. And winding up and building up energy for the next move, which, as long as we're below the square, odds favor the next move will be lower. So,
yeah,
as long as we're in that position, much like we were up here when we were below the full square, and we bounced around for 5, 10, 15 trading days, eventually it resolves lower. So not a positive picture for Bitcoin. But let me throw it over to you. Let's review the big five, and then we'll come back and talk about what's going on in commodities.
Just to let people know, what's the full square level there? I know you call it out every week, and it's probably on the spreadsheet.
It is on the spreadsheet. So it's 41,000, around 41,800. That's the critical spot here. Below it, it's vulnerable. Above it, it's got a chance to move higher. And Barrie mentioned the spreadsheet. We have a Google Doc that we share with everybody. When we post the link to the show, we'll put the link to the updated spreadsheet. All the levels, Barrie's levels, my levels are on there, and we update it every week. So you can check out the spreadsheet if you don't get the levels off the recording. So let me throw it over to you for the big five. Choppy week, wasn't it?
choppy. That's just a little. It's almost as if nothing happened in the
Yeah.
markets.
We went everywhere.
A whole
and
lot
ended up
happened out in the
nowhere.
world, right? So,
A lot of movement, no progress.
yeah. All right, we left off last week with a couple of levels. It was 42.75 and 43.15. And the idea was that 42.75 should be strong support. And if we could hold above 43.15 cleanly, that we should go up and test 44.50, which is major resistance. And that's why we drew up this little box up here. Being that we basically sat on top of 42.75, moving forward, I would say watch this 42.75, and with this volatility and the VIX at these levels, above 30. When I say 42.75, it's going to have to be a zone. I don't think you can really use it just to be a tick. So somewhere between 42.60 and 42.80, I would say, is kind of the zone you want to watch there.
Man, they were really defending that 75-80 area this past week.
Yeah, that's a key level, definitely a key level, and we got to see that. And so going forward, I would say that's really the level to watch. If we can sort of hang above that, especially, we go down to check 42.60 or so and quickly recover that. I think we have a shot at going up and testing 44.50. Now, if we fail that early on and unable to recover, then I think we're definitely going to go down and check this 40.75, maybe 4100, 40.75 area down here, which is 90 degrees down. So that's my take, just to keep it simple. And because the markets didn't move much, our bracket's pretty much the same. And the idea being we wanted to hold or not. I think this 42.75 is going to be the pivot for next week.
It's funny, if you remember in like 08, 09, we called those kind of levels like the trap door to hell. You lose it and you just fly right into hell.
Yeah, it's there. It can happen, and we have to really watch that. The other thing I wanted to, let's look at the weekly. Well, one thing I noticed was on the way down, we had 1, 2, 3 bars down, 1 bar counter trend, 1, 2, 3 bars down, 1 bar counter trend. Now, if we can't take the high out of last week, we're going to probably do 1, 2, 3 down again. And that would get us down to about 4,000. Just remember that, right? That's happening.
The interesting difference too is if you look at those other boxes and the other lows, we're hanging out near the low, and we just got the hell out of there on the other times.
Right. Here, a little bit difficulty.
It's having trouble. It's banging around by the lows as opposed to just, one bar down and then it goes.
So it's something to watch. Just we need to know last week's high and just watching that to see if we take it out or not. If we don't, we basically have, we're going to either have an inside week or we're going to have a lower low for the coming week. And that's going to set up probably a couple more weeks down, at least one. Charts I want to look at. This one we looked at last week. This is the calendar day chart, and it's good for timing. And here, Ben and I were talking about a case, or trying to make a case for a potential 3 drives down, which would, and if it's even halfway evenly paced, we should get down to end of March, and towards the end of March, and that will be 90 down. And if we do that, that low turns out to be about 40.10 if we hit the line towards the end of March. So around 4,000, that sort of calculates that way also. So it's something to watch. And even if we take the 90 out for a little bit, let's say we take it out by an eighth, going about an eighth into the next square, that would pretty much stay in line with 3 drives down. And that would give us a, hell of a sort of a bear market run up if that happens. So that's something to keep in mind, because we're watching these calendar day counts. And we had a really good one, which was the 45 high to high that came in. And because of that 45 sort of vibration going on. So I think 90 high to low wouldn't be, out of the question.
No doubt.
It's something to watch. And last week we did have on regular trading day chart, we did have 36 days down, and we did get a bounce. So this is why we really want to watch that 42.75. If that area holds and we run up and make a new high for the week, that means the 36 was probably good, and we're probably going to run up and test the the 4,500 area. The basic thing was what we just talked about. 42.75 is the key to see if we can recover that or not. And if we do, we have two levels: 44.50 to the upside and 40.75 or 4,100 to the downside. Anything you want to add to that, Ben?
No, I like the timing, and I think that marker of the high for, if we can't exceed the high of last week, you got to really watch if the selling picks up.
Yeah, that needs to be, that we got to watch that. And
That's
it's fairly, it shouldn't be that difficult to monitor.
Mm-hmm.
If you're following us on Twitter, I posted his 4-hour chart, and we posted it as soon as the low came in on the 23rd.
That's a great chart.
Yeah, it's been very useful, and we had this equilibrium, and these patterns I don't use all the time, but you put them on and see if it has any traction. If it has traction, they tend to work for a while. So and they become very useful. So the trick is to early on figure out if it's hitting,
if it's working.
Yeah, if it's working or not. So this one seems like it's working, because the first sort of ABCD up, stalled up there, and then we dropped down the gap, run back up, back down, run back up, back down. So we basically just traded this up and down last week, and it was working just fine. Now, the key thing is we're coming towards the end of this arc. And if we don't take off, and if we kind of break down below this, it's going to get weak in a hurry. So we're coming into a critical level here. And that's why on those other daily charts, I was really sticking by this 42.75 level, because that's, right in here,
What's the date there at the edge of your arc? Around March. So it's early this week.
Yeah, this is
Tuesday, looks like the 8th.
If I take this cross right here, that's the 9th.
Tuesday, Wednesday. Yeah.
Tuesday, Wednesday. Now, the other way to look at this, and I'll post this in real time, is we go down and we hit the arc, and then we take off, and that could just be parabolic if that happens. And then what happens there is, and we did this with a couple of other markets in the past, is when it leaves the arc at some level, that then we get a big sell-off. I mean, that's sort of the normal pattern, but I just wanted to show that if you guys have your 4-hour chart, you can just drop these two parallel lines and watch that. It makes it just a little bit easier.
It helps you from getting chopped to death.
Yeah, at least you know your boundaries, right? Like we always say, you want to be able to frame the market so you know where the frame is, and you can deal with it a little bit easier. So that's the E-mini. Let's go on to bonds.
Bonds are interesting.
Bonds are definitely
at an interesting spot.
All of a sudden, not so boring. So last week we left off talking about, what did we leave off? 153.19. We talked about, if it can hold above that, it has, we should go up and test the 158 area, which is the half of the square. And if we can hold above 158, I think then we can probably go higher and maybe test these old highs, or maybe 164. So the key for next week is, can we get about 160.20, which is the key level we were watching. We've been watching for months, actually. So 160.20 for next week. We're treating that as key resistance. And you can see there is a trend line that's coming off of these two highs. And we're going to touch those next week if we go any higher. And if we get below 158, then I think we're back. This was just a little correction on a bigger downtrend. So the key, the question is, did the big low come in? And we saw that it was possible that we had a case for that to come in. And the proof would be for the bond market to sort of hold the counter trends on the way up. And in this case, we want to see if we can hold above 58. And even if we get lower, we want to hold at least above last week's low. That would make sense.
Mm-hmm.
And then go up and try 160. If we try 160 and then we stay above 158, then I can say, okay, we have more to go to the upside. For now, it's still weak, below 160, and some of that could be this news-driven, volatility showing up on the charts.
No question.
And looking at the weekly charts,
Weekly's right into one of your lines there.
weekly bonds, yeah. And that was, so weekly basis, this is let's say 159. And we had this box drawn out. This is key resistance. And we really pushed it to the other end of it and kissed the trend line from below here. And, odds are we're done with this leg and we should probably back off a little bit, at least correct.
Mm-hmm. Mm-hmm.
Now, if we blast through this 159 and kind of sit above it basis weekly, I think we have probably more to go.
Sure.
But if this is, halfway normal, then and that should hold it for a while. Now, we talked about the possible low coming in. That was, I think Ben pointed out last week or the week before that, we did on a weekly basis come down 72 degrees. And that's, 72 works fairly well in the bonds. So it's possible. And we talked about it last week. The proof of that would be being able to hold about 158 or 159. So for now, I'm not so certain. I'm not so sure. We'll see how it goes. Right now, we're dealing with resistance and trying to see if the bonds can sort of hold the gains. So that's bonds. Do you have anything to add, Ben?
I'm going to cover bonds because I think there's a setup coming. So yeah, I agree with your assessment, but we'll go over it in my segment.
All right, good. Next, we'll talk about crude.
What a monster.
Just can't keep it down, man.
No.
Doing really well. All
and
right.
Tomorrow we're going to do the monthly shows, man. You look at the monthlies and it's not done.
No.
We'll cover it. It's not done.
Well, last week we talked about this, approaching $107, $108 would be 90 degrees up, and that being potentially resistance. The other thing we've been talking about is 97, 98 area has been on the charts forever, and that was a key resistance level area. And we got up into that, really kind of battled it the first time, pulled back a couple of days, and then we ran back up into it. And with all the news picking up, we eventually took out the 97. And we talked about clearly the next stop would be 90 degrees up from that low, and which puts us into about $108. And at the time, Ben, we were talking about this, like we couldn't almost believe it.
Right.
How could it get there?
Right.
Well, this is how it got there. Well,
Yep.
Now the key is if we can hold above, let's just say 107.50. All right. Let me put that on there. So let's say 107.50 is a level to watch. And if we can hold above that, I think the final end could be $135.
Mm-hmm.
So that's what's going to be in my mind while we're trading this next leg. Any pullbacks about 107.50, if we can hold that, I think we have room to run. And we're not talking a couple of bucks. It can really run up to 135 and maybe more, but that's the next big stop, next big support level that I have on the charts.
Mm-hmm.
And if 107.50 gives out, 102.50 is something you guys might want to note. And, it's fair game if we can get down to 102.50, it's still good. And it would depend on the sort of the pattern, but that's the box for support from here on out we're going to deal with. So I'll put that box in there. And we did that before, we did it last year, to bracket this box, and you see how we held above it, right, on the way up.
Mhm.
And then we had the second box, and you can see how we got into that and moved out of there. So here we are again. But here it's not boxed in here. We're looking for that zone to be support. And because it's volatile, I think it's fair to have a little bit of a wider range in there.
Yeah, bigger picture, it still looks good, which again, it's hard to believe, but the charts say what they say. Just think, a little over 2 years ago, they were paying you to take crude.
Mm-hmm.
Shocking.
Yeah. Who knew?
Right? Who knew?
So, well, we knew. We've been bullish ever since that. just didn't know when it was going to go parabolic. But,
Right.
Listen, one of the things about the high that we got in last week is we're 216 degrees up from
the spike low. Yep.
From the spike low, and that's something to note. So
Mhm.
the way I would play that is we want to, we know that's there. So 216 degrees is up there, but it doesn't have to be exactly there. I mean, the price doesn't have to stop there at a tick, but what's important is how we handle any kind of a counter trend here, any kind of a pullback. So any counter trend holding above 107 or in this, above this zone here, I consider to be positive. And once it takes out this level again, if that happens, let's say instead of going higher next few days, we get a counter trend if it holds here and lower time frames, kick it into a trade, and we take that out the second time, then I think we can get to 135 target fairly easily.
Mm-hmm.
So that's how I would set that up for crude. Looking at the weekly crude chart, we got to 90, this 97 target we talked about on the daily. This is where we got that. That's the 90 degrees up on the weekly chart. So
weekly.
Yeah, and it needs, that's fairly strong resistance. Now, what happens with strong resistance with squares is that if that gets taken out, all it means is there's a lot more to go. And
right.
Here, we didn't even get, not even a 1 bar pullback, really. We had maybe this one week right before we tested it, but basically just straight up
shot right through.
And that means there's a lot more to go. Normally that's the case, right? Other than a false break or something, that doesn't look like a false break so far. So I think because of that, above this 97 on a weekly basis, you really have to watch it. And it's a key number to watch if you trade oil, because it's 90 degrees up, and at some point that's going to be tested, and it'll be a key level to watch. We talked about 3 drives up into a high because it was so perfectly lined up. Again, when 3 drives or 4 drives gets blown out, it just means you got to flip on the other side and go, because they end up, going a long way in the other direction.
Mm-hmm.
So you have to be able to read it. Anything you want to add? Or you're covering oil, crude a little bit, right?
No, I'm not going to talk about crude. Just that it's interesting, some of your lines. My weekly support is around 114, and so is monthly. So right in that 114, 115 area.
Mm-hmm.
If it sits on top of that, it's a launching pad.
Well, this is 108 degrees up. It's 1.5 squares up.
Mm-hmm.
So here's the deal. So that's how I got that 135 up there. If we can clear that, then we're going to definitely go to 144. No question about it.
Mm-hmm.
And that's an easy trade. So the pullbacks, for that to make sure this is not some kind of a high, the pullback really needs to hold above this 107.50 or somewhere between 102 and 107. We'll have to watch how that goes. But if it just blows through, we can just count on it going right to the 135 area at some point, sooner than later. Right?
Yep.
All right, so move on to gold.
The sleeping giant has awoken.
It looks like it. Okay, 1915 was a level to watch last week. If we held above it, gold's in good shape, and looking for it to go higher. The 72 degree mark resistance was around 19 1963, let's say 1964. And well, we just poked above it. I think now, long as we're above, let's say, 1915,
Right.
1974, that box, with the volatility, you really have to kind of box out an area to call this out, because it's easier than looking for one really tight spot, right? So I would say that's sort of the zone. And as long as we're above that, I think, we have upside, man. If you just look at the fork that we added last week, at 2100 is the next half square. So we open up that area.
That whole quadrant's open now.
That's open now. And so, like I said, watch your pullbacks. They need to hold, in this zone ideally. And 1915, I would say the most. Right?
Mm-hmm.
But under these conditions, the pullback should be very shallow, just like we saw last week. They were very shallow.
Just stepping back and looking at the chart, Barry, look at this last month and a half or month or so of price action. It's so different than the previous 6 months.
All this, yeah.
You
Somebody
can
saw
see
something coming right about this low here.
Yeah, the changing characters there. It's just now it's moving and not chopping.
Exactly. So, and if we can clear this, it's going to move very cleanly. So we're almost there. So 2000 is right there, weekly basis, 2000, 2100. That brings us right up to about a square and a half off of the starting leg back in 2018. And we talked about this basing for the last, year or so. The last couple of years, the idea was, we had a triangle. We talked about the compression and it's going to break out at some point. We talked about the higher lows going into it and how, this 1881 area needs, once that cleared that, it should really open it up to 2000. Looks like that's exactly what happened.
It's playing out.
Now 2000 to 2100 is the next target, I guess you can call it. But once it gets going, remember, this is it's been brewing for a while. And if you go off the low in 2013 or 2016, 144 degrees up is 2200. And I wouldn't put that out of the question. I think that's definitely possible at some point.
I agree.
So we got to watch this. You guys know the short-term levels. So this is sort of the weekly picture that's in place. And it's good to keep these things in mind. And if you put the same square on the low of the sort of the consolidation, you can see we're right at the half square here. And 2000, 2100 is the next target, which is very close to the old highs. And if we can take that, that's when I think it'll, that's what opens up that higher prices after that. So we have to see how we deal with it here. We could get up to 2100, 2000. And if we can clear that, then I think we clearly opened up the other second half of the square.
Looks good. Gold looks good.
Yeah, gold looks good. It's just starting to break off of this square 72, which has been in for months and months and months. So
yeah, it's not late in the move by any means. That's the thing that makes
well,
it
we just
attractive.
got through the middle of the fork, which
right.
And if this thing works even halfway close to textbook, we should get up here by the end of the month. We should be up in this 2100 area.
2100, yeah.
And if you notice, it's not just the 1.5 squares up or 108 degrees, it's also the upper fork boundary up here. So there's a lot of stuff here that could easily pull it up. So watch it closely. Those are the levels. Let's move on to the dollar.
And it's interesting that you're now covering the dollar because gold is doing this with a super, super strong dollar.
Yeah, exactly. So the dollar, well, we can't say we haven't been bullish.
Nope.
We were bullish when it was out of fashion, eh? So, all right. And it'd be really good if you guys go back and watch the old videos, because we talk about the same set, every week, and you can see how the story builds, and it sort of continues like a Netflix series. And
look how beautifully that half square held it, and then it took off.
Yeah.
Right there in February.
And that's exactly why we were bullish all through here when we
Right.
were just sitting around. And we talk about false breaks, that happened here, right?
Mm-hmm.
Came down, went back up, false break here, came back, held the line, held exactly half square.
Yep.
And then we started the higher lows, and here we are.
And now it's ramping.
So we had 99 here. I don't know if I put this in last week or the week before, but 99 was sort of the target that we had in mind for last week. And we, almost got there, close enough. And I looked at the dollar a little bit this week. I think, full square is not out of the question here.
Mm-hmm.
We could go up and pop 100, 101 or so for the dollar easily, because we are above the half square. Now it's a matter of just, how do we get there, fast, quickly, or slowly?
Mm-hmm.
But we clearly got through this whole sideways. So all that is a big buffer now. Now we're above that. So it's a matter of trading the counter trends, as long as we're above this key 97 level, which used to be our old target for years, or for months and months.
Mm-hmm.
So weekly basis, we called out this 98.25 last week, looking for that to be resistance. So it was 98, 99, it was in around that level. And now, at least basis weekly, we broke out of the square. I think it looks like a fairly decent break.
Mm-hmm.
And it opens up the upside. And with the dollar, we don't want to get into these huge targets. We want to go sort of eighth or quarter at a time. So
Right.
I think this 100, 101 is really clearly the next target. If we can hold above this, hold above
that 98 and a quarter, right? You got to stay above that square.
Yeah, stay above. But looking at the old high over here, sometimes I use that to
give it a zone. Yeah.
So it's 97.50, I would say.
Mm-hmm.
So any pullback holding above 97.50, I think it's fair game. We can probably, but clearly holding about 98 will be the key, because then it's above that square.
Mm-hmm.
And we have more to go. So about 101 would be ideal, probably 100 and some change to the upside is what I'm thinking.
Nothing bearish about the dollar right now.
Not right now. And there hasn't been for a while. Only time we kind of even blinked was right here. Remember that? It broke everything. That was a really good kind of a false push, flush to the downside.
The only thing bearish about the dollar is FinTwit. They keep talking about the dollar's going to zero and the dollar's doomed and dollar hegemony is over.
Well, here we are.
And it's grinding higher.
Yep. And let's take a look at the euro. Well, Ben, we've been on this thing like
totally
unbelievably. So if you guys have been following, it's been a great story. We had this zone marked off early on, and had a sort of false break to the downside, false break to the upside. This bar was a beautiful false break. Look at that right there, just enough. And that was it from there on.
Enough to grab the stops, and then
bam, straight down. And so next support level would be around
108.
Yeah, 108. I think 108. Yeah, I would say 108. That area is it's a good area. Or 84, right?
Mm-hmm.
But whatever the case, this thing's
Europe's in trouble.
Yeah, I was trying to search some way to say that.
Yes.
Whatever the case, it's in trouble. And
yeah.
And if this 108 area doesn't hold, it's exactly 10. It's 108 500. Let's say 8,500, right?
Mm-hmm.
If that doesn't hold, boy, we have a long way to go.
Mm-hmm.
So it's connected to the dollar. We'll see. Dollar's coming up on some resistance. So it's possible we get into this, 108, 107, this high sevens and low eights, which is right around the 144 degree square. So it's possible we find some support down here with these charts. Ben, I haven't had to move anything for like months.
No,
It's
they've just been working like a charm.
And here's the box we had drawn in, and we were talking about how the upper end was resistance, which was a half a square, which it was. We bounced
Half
up
square
again
worked perfectly.
And look at this. We're up here right into this middle of the square, right?
Mm-hmm.
Squared out, came back down. So got stuck below. This is what we talk about, getting stuck below the 50% of the square, halfway, and that's that dashed red line here. Got stuck, just couldn't do it. And this is not like a 1 hour chart. This is a weekly, so a lot of power when they can't get through and they fold over and turn down. And looking at this again, the old low here is low 107, high 106 area. So we still have more to go.
That's the target, yeah.
So I don't think it's done by any means. And that said, this upper end over here, 120, 119 area is resistance now. Well, that's all I got.
Excellent review.
Thanks. Let's put it back to you. Cover some of the commodities and other goodies.
And it was a hell of a week in commodity land, I'll tell you.
Wow. Yeah. Well, that's part of why I get a rest this weekend.
Yeah, that's right.
The focus is just too much. Eh?
Yeah.
All right. Let me put it back to you.
So before we jump into commodities, let's take a look at the NQs. Mm-hmm. As you know, we've been watching the NQs and documenting it as part of the story since we started these broadcasts, and it's been leading the way on the downside, and it continues to be weak, and it's just showing lower lows and lower highs. We've had battles at squares that are just resolving lower, and we're having a battle right now at this full square, in this 13.8, 13.9, 14,000 area, call it 14, that it's sort of our bull bear line right now. And you can see last week we tried multiple times to get above, and the closes were either right near the line or below the line. And that's showing weakness. As long as we are below this, call it 14,000 level, it's vulnerable. And vulnerable to make another low, half square for sure, that we've tested on the last low, which is around 13.3. But I think if we can't get above 14, you're going to see this thing at 12.8, 12.7, this full square here at least. We have a steep trend line, and again, the trend line's holding. Every time they pull up to it, can't get through. So there's not a lot bullish about the NQs on my read here. Where are you on the NQs right now, Barry?
Well, I'm watching both sides of the chart. That 14,000 plays both ways. If we can't get above it, clearly we're probably going to go for that 3 drive or go lower and make it lower low. Mm-hmm. But if we recover that for some reason, then I think we're probably going to go up and test that upper full square, not right. Even a half, but the one above that.
Yeah, you're talking about 15.2 area there if we can get up there.
Yeah. And if this is sort of a bear market, we ought to get there in a couple of days and
right,
all kinds of euphoria,
right.
So, but I think you got to really watch this because we've been coming down for a while. We've done couple of months, so you really have to watch it here. If we lose it here, yeah, we can certainly go and make lower lows and test some of those lower boundaries. But if 14,000 holds up and we somehow end up above it, I think you have to really be careful.
And the interesting thing is the timing's been working fairly well on this. I mean, you can see the high came in just a couple days after the full square in timing.
Mhm.
This counter trend ended on the full square in timing, and this week we're going to hit a full square again.
Right.
So
We got
let's
to,
see,
got to watch a
let's see
little
what
bit.
happens and what comes out of it. Let's take a look at some of these commodities now. First one I want to start with was the 30-year. The 30-year Treasury. Barrie covered bonds, and I'm pointing out bonds because I think it's setting up potentially for a really good short trade. We were riding this move down into this lows. We had the timing come in. We had a little false break here, and we got out of our puts and just sort of stepped aside and have been watching the bonds ever since. This last week, we pushed up into this half square area, which is around 160. And as you can see, when you look left here, a lot of resistance in here. So this coming week, we're watching to see, if we can test this full square or even push a little bit, a little bit extra, maybe even a full eighth, and get up to almost 161 and then fail and get back below the half square. It looks like a really good setup on the short side. So nothing to say, hey, Sunday night when the futures open, we got to jump in and do something. But the setup is forming to potentially give us a really good look to the short side. And with the monthly show that we're going to do tomorrow and post the video to, you'll see, it also, what the monthly supports the same sort of thesis on this is that we're doing some sort of counter trend here before the next move lower. So I know you covered bonds, so you don't have to add anything else, but just we're going to watch this 160 area all the way up to about 161 this week. See how price acts there. If it's strong, obviously, and can sit on top of this, there's no trade, and you're going to look and go up and test the full square up here. But if we falter here and get back below and get stuck under, it's sort of a textbook counter trend back into resistance that you can sell for a good risk reward trade. Let's take a look at gold. Here's Barrie covered gold as well, but here's my look at gold. And the grains and a few other of the commodities that we follow have made and are making sort of spike moves higher, and we're watching them. The bigger picture is still very bullish on them. The question is, what kind of a correction are we going to get? What kind of consolidation are we going to get once the highs come in? So we are watching the grains very closely. Something like coffee that started pulling back, cotton that started pulling back. Those are just some that come to mind that we're watching to see, are we going to get a sharp correction, a consolidation, a sideways? Is it going to be a month, a week, 2 months? But we're going to keep those on the radar because, as you know, last fall was when the grains had been correcting for 6-8 months. We picked up the lows there and rode them for a nice profit. But I tell Barrie every week I'm complaining about the fact that I didn't stay longer, but what are you going to do? It's part of the game. But the idea is these other commodities, as they go into the corrective phase, we look to try and isolate, a good place to enter what is a continuing bull market, we think, for the next 2 to 3 years in this space. And gold, I think, is a good example of that. It's been correcting for 18 months. That's the story we've been telling. We started watching it here as these lows came in, and then we started getting higher lows, and then we started getting really, really interested and really aggressive into 2022 as the pattern starts unfolding. I think gold is on as Barrie was discussing, it's on a very important breakout. We exceeded this half square, which was, the first sort of marker in the test was, could we get above this 1925 area and hold it? Right now we're doing that. The next test is going to be up here at the full square, which is around 2000. We want to watch price action there, but if we can get on top, sit on this square here. It opens up this full square up here. Minimum was a half square is 2100, and then the full square you're talking about are in the 2200 area. I like the pattern. Again, we talk about in these consolidations, when you begin seeing these higher lows start coming in on a daily time frame, you got to pay attention, wait for the higher highs, and then you can see how the angle of ascent changes. And once that changes, this is when you get into the fast move, or you want to be in a position. And I think we're early in that fast move in gold, and it's the time to be involved in the market because it's moving. I know you covered gold. Anything else? Any comments on the chart here, Barrie?
Well, I think all of these, commodities, we had to wait for years to get things moving. And now, now things are moving and trending. I think it's important to just, fall back to your technical stuff and just get into the mode of trending the trend and look for the pullbacks and just basic trading. I think, there's plenty of opportunities, and just to keep in mind that, this just got started and it's been, just sleeping for years, some of these markets. So I think there's a lot of good trading that's opening up for time to come. And to keep that in mind, this is not like just for 1 week and it's done. So I think we're entering a time we can do pretty well in commodities.
Absolutely. And it's the thing, in a bull market, you buy the dips. In a bear market, you sell the rips. These commodities are all in. If you're looking at the monthlies, they're all in long-term bull markets. Mm-hmm. So you try and pick your spots on pullbacks, accumulate them, and then ride that wave. Let's take a look at gold's little brother, silver. Nice little breakout here this week in silver. Again, a very similar pattern to the gold. We were monitoring this pullback, waiting to see some lows come in. We got the lows, and then we started getting higher lows. And now the angle of ascent is changing. Instead of going sideways, now we're going up. And you can see the acceleration here that's starting this week. I'll call to your attention when you're looking at these squares, if you're using the squares, one of the telltale signs you can see is when you get a full bar that stays above either the half square or the full square, it tells you that, price is going to move. And we got that here. Instead of crisscrossing like it happened here, we had this bar on the March 2nd this week. The low was on the half square, and now next day we get an up bar. The next day we get an up bar, closing at the highs of the day. Silver looks good. This half square is at call it 25. The full square up here is about 2680. The full square is on tap right now, and the target. If we can get on top of that and sit on top of that, then we're talking about 2850 and $30.30 on silver. So silver looks good. The pattern's good. It's broken out of this 18-month base, this correction off of the previous highs, and we're early in the move. What do you think about silver in here, Barrie?
Well, I'm back to trading it.
Mm-hmm.
Yeah, I think these are all starting to move, so I think your call is good. If we can get above that next square, I think there's definitely upside, at least to test the old highs.
Absolutely. And when we review the monthlies on the show tomorrow, you'll see where we are in the move on a monthly basis, and it's still fairly early. That's the key thing. Another market that we talked about a couple weeks ago in the middle of some brutal chop, but we said, hey, watch this market, pay attention. Things are starting to move. It's getting ready to go, and probabilities favor a bullish resolution. And that market was copper. And we were talking about it in here. We were talking about it in here. And we were saying, listen, this half square, if we can get above and settle above this half square, it's going to break out. Well, for the first time last week, we did that. We've gone above it and then immediately pulled right back into it. Touched it, couldn't get above. Touched it, couldn't get above. Well, here we got above and just took off. And copper actually broke out completely on Friday, took out the previous highs from May of last year. What we're watching on copper to get more involved, or if you're not involved, is watch this pullback. If we can sit on top of this full square at 480, and even pulling all the way back to this high at around 471 on the previous move up, copper looks good. And this is a multi-month triangle that was forming. Again, the heads up comes when you see the lows come in, and then you start getting these higher lows, and then you see the angle of the pattern change. It turns up, and then you sort of get this kind of move. So copper looks good. We had a breakout this week, watching pullbacks to see where the support comes in. Does it come in at the full square in the previous highs? Does it pull back to this previous high? As long as we can hold those and reverse back up, you can believe copper's going, a lot higher here. Also notice the half square timing when we hit that half square where things took off. It's good timing at that half square. What do you think on a copper at this stage?
Well, it was a huge coil.
Huge.
And if this is not a false break, I think, we have so much higher to go.
Yeah.
Right? At least 2 squares up. So that's not even on the screen.
No, it's if you measure it out, it is 2 squares, and it puts you up around almost $6 for copper.
Right.
575.
Mm-hmm.
So copper looks bullish. Watch the pullbacks, see the quality of the price action on the pullbacks and the levels it holds, and that'll give you clues of whether that 575 or $6 makes sense, or is it just pie in the sky. But it looks good. Want to bring back an old favorite, one that we rode last year for a nice hit, and that's nat gas. Everybody knows what Crude's done. Crude gets all the headlines. Well, quietly, what's been happening in natural gas is after this, this great run up that we caught a good chunk of that run up, and we had a sharp pullback, since the highs in September, October. So it's been almost 6 months worth of pullback here. But what's been happening recently is once we made that low in late December, early January of this year, we're starting to see a series of higher lows. We had a trend line here from the lows that held, then we've got a trend line here that held, and now we're getting a steeper angle again. Nat gas looks like it wants to go, and maybe it's going to go in sympathy with what's going on with crude and what's going on with European natural gas, which is by the way going crazy to the upside. So I don't know what the fundamental reason is or why it's going to do it, but probabilities right now are favoring that gas is as long as we can hold above this half square here, which is around 450. As long as we hold this 450 area, that we're going to challenge the full square here at about 510. And if we get through that, I think we're going to challenge the highs we made in September, October. So nat gas is on the radar again. I think we gotta watch the price action in here and look for continued signs of this accumulation that we're beginning to see after this pretty sharp and nasty correction, and then this jiggity jaggedy chop that we've seen for the last couple months. What are your thoughts on nat gas, Barry?
I'm a little jittery, but well, I would say half square is definitely a key, and I think a breakout of the upper square, 5 and some change, is the sort of the takeoff point for nat gas. So I think if it goes this time, it's probably going to hit the full square.
Agreed.
I don't think they'll be messing around at this point. So
no. So keep an eye on nat gas. Watch the levels that are on the spreadsheet, and as we hold those levels or not, you can make your assessments of bullishness or bearishness on the commodity. But this is one that looks like it's starting to be accumulated for the next move higher. But we'll see soon.
Mhm.
The last one we want to look at, an old favorite, is sugar. It woke up from a slumber this past week. Sugar's basically been chopping for 6 months. I mean, look at the size of the bars for the last 6 months, and then look at the size of the bars for the last week. Somebody wanted to own sugar this week, and they bought it. They bought the lows. Look at this bar. Open on the lows, close on the high. Open on the lows, close on the high. Open on the lows, close on the high. 3 days in a row. I have no idea what's
Coming off
going
that
on.
half square, mind you.
That's right. Coming off of support that held on this half square. I have no idea what's going on in this market fundamentally, but somebody with deep pockets 3 days in a row bought this thing from the open. Friday, we closed right at resistance, this half square at around 1950. That's the next sort of big test for this. As you can see, it's kind of a balance point between all this chop that we had, the half square, where it was, basically ping-ponging between the top and bottom of this square before it started this pullback. So if we can get above this half square here, I think we're going to challenge this. And the speed of this move and the ascent, the angle of ascent tells me that if we do get up there, we'll probably take it out these highs. So sugar is back on the radar, back bullish. We took out this downtrend line this week, and we're moving. I mean, it went through this full square fairly easily.
Mhm.
And then the action on those bars really told me that the money was coming into sugar. What are your thoughts on sugar?
Well, I think any pullbacks above that full square is fair game to the upside.
Mm-hmm.
And if we ever had a time to expect new highs, this is probably it.
Right.
But I think that full square, as long as we're above that, counter trends are fair game.
And I think sugar is a good example of the commodity space in general that we were describing, right? Like it had a beautiful bull run for a couple of years here into a nice high. And then it went quiet for 6 months. It didn't crash, did pull back, but didn't crash, didn't do anything dramatic, but just basically lulls you to sleep. And then it looks like we're waking up from the slumber again. And I think that this is sort of a model for what these commodities are going to do, as long as the monthlies and the longer term charts are supportive of this bull market. You're going to see this kind of price action in the daily, like we said with the grains was last fall. September, October, we were looking at accumulating. We were seeing signs of that they were bottoming and accumulating after they corrected for 6 to 8 months. Then they had this massive move for the last 4 months. I think each one of these commodities, you just got to find the rhythm and find the spots where they correct, pull back, and then begin showing you signs of accumulation again, because this is where you get the sort of the higher highs and higher lows. If this is a low and we take out that high, again, it's another higher low in the chart. So that's all I got for this week. The coming week, I'm going to be watching bonds very closely to see if we get that short set up. Gold, silver, and copper to see how they tack on after having a stellar week. And then for potential entries, re-entries in some that we've traded before, I'll be watching the nat gas and the sugar. Where's your focus going to be this week, Barry?
Crude, S&P, and bonds, because they're all at key levels that we talked about, and also gold. So I think those are the key things. Dollar also reached, that 99 area. So that's the target area, and just watching that very closely.
Great. It should be, the whole month of March should be super volatile and super exciting. So for traders, that's all you can ask for, is to have an environment where things are moving. And I think we got it, and it's up to us to take advantage of it. So
Also, Ben, just one other thing I just wanted to point out, like when we have a whole week of sideways, the following week, there's a good chance we get a decent move. So, it's really important to watch it closely and catch that.
Yeah, the S&P you're talking about, right?
Yeah, S&P. Mhm.
Absolutely. Yep. So have a great week, everybody. Barry, have a terrific week, and we'll talk to you again next week.
Yep, sounds good. Thanks, Ben.
Thanks.
Thanks, everybody.
Bye.
Have a good week.